Guys, welcome to another video, and today I'm going to talk about what are options trading. So I'm on my desktop, and for those who are new, my name is Edgar, and I'm the guy behind the camera, and you're the one following this journey with to hit $10,000. Now, if I could hit the $10,000 by June, that would be awesome. Which is we're in February 10th today. So let's dive right into it. So as you can see, today it was a good day. Made about over $600 today, and majority of this was made from options. You know, buying stocks is great, but normally that's more of long term, and options gives you the opportunity to triple, quadruple your money very fast. I mean, I made over 200 plus dollars within an hour. So it's a lot riskier, but there's also ways to not lose so much. So I'm going to show you a couple of tricks today. So on your phone or on your desktop, this is what you see. So this is some of my watch list, some stocks that I'm following. So for this purpose, I'm just going to go ahead and show you how and what is options are. Okay, so we're going to go see this this stock. So now, as you can see, today it's at $27. Instead of buying the stock, we're going to click here where it says trade alpha options. Okay. Here is where the options kick in. So each of these options is a contract, and it sells you by 100. So for example, right now the share price is $27.55. So you have the option to determine if the stock is going to go up, which stands for call, or if you feel that the stock's going to go down, you put. Okay, so normally I like to call. So as you can see, it says here $27.55 is the current share price. Now, do you think the stock is going to go above $28, $30, and so forth? Now, obviously, if you go up here, $35, I mean, chances are that it might not hit that by this expiration date. Now, this expiration date, you have to select. So I always like to use like further down, like either March the following month or a couple weeks in. So for example, for this video, we're gonna go ahead and select February 19. Okay, so our prediction for this stock is that by February 19, the stock is gonna go $28. Okay, so if I click on this, it just gives you some stats here of the predictions, and we'll get a little bit more detail into regards to what delta and all this stands for. But trust me, I do not want to confuse you. When I was learning about options, and by the way, which I'm still learning, there's a lot of YouTube videos, and they're very, very, very confusing. I mean, they will just, when I was learning, it was like I wanted to bang my head against the wall because they're so confusing. All you have to know is either A, you think the stock's going to go up or it's going to go down, and this is the price. Okay, so let's say I wanted to buy this one. So I think that by February 19, the stock is going to go $28, which, you know, it's very most likely it will, because we're only 40 cents away from 28. But if I was to buy this, okay, see how if I click the 435, so to buy this is going to cost $4.35 per share, and remember, it's per hundreds. So if I was to buy this share, one contract, I will pay $435. So again, there's more money involved where you have to fork out. So for example, I have to fork out $435 and hope that the share price hits the 28 mark by the expiration date. Now, if I'm correct, then you are going to get paid a certain percentage times 100 shares. So, and that's where you make most of the money, because you're buying 100 shares. Each contract is 100. So for the one that I want today, I bought 5 shares, which was 500 shares. So if I was to predict this, I will pay $435, and it will tell me. What you want to do is you want to keep an eye on it. So when the stock market does go over 28, and you hit your break even, or once you go in there, you can see how much you're making for that day. So if you see that you're making a lot, then you want to sell to cash in the difference. Okay, so we're gonna go ahead and I'm gonna show you one that I currently have. So if we go back to my portfolio, I have this one right here. So Sensonics, or SENS, as you can see here, I bought a contract. I paid $475 for this contract, and I'm predicting that the stock will go higher. Here, I'm trying to show you here. Okay, what is it? Okay, I'm going to show you the stops. I'll show you some of the stuff now. I don't want to confuse you. I'm trying to keep it as simple as possible. Okay, so here is the one I bought earlier today. Okay, so I bought it February 10, 2021. I paid $475. I bought a total of 5 contracts at 95 cents, predicting that the price is going to hit 4 by March 19. Okay, remember the stock price right now is $3.94. So as you can see, I'm very close to hitting my prediction of $4. So again, I bought $475. I got 500 shares, which is 100 per each contract. So if I hit my mark, then I will get a nice chunk. So here, right now, since I have not hit my predicted price, I'm currently losing $10. I'm down 2.11%. So once this passes the $4 mark, you're gonna see here that the price or your returns increases. So it will be green and it'll show you a plus sign showing how much you're making so far for this contract. So once you see that you're up a couple $100, or some people like to keep it under 20%. So if you see an increase of 20%, people will tend to sell. So for instance, if I wanted to sell this, then I'll go to sell to close, and then I will sell my 5 shares, which is 5 contracts times 5. So if I was to do this, I will get a credit right now of $450. Okay. Now, again, I lost money because I originally bought it for $475. So if I cash out now, I'm only going to take $450. So as you can see, I'm losing $25. So, but I'm going to keep it there, and you can hold on to this contract into the expiration date, which is the date you select, which is March 19. Now, if this stock continues to go down, and obviously I don't see a profit, I could sell and just take whatever I lost, or you could just hold it until this day comes up in hopes that it went up to that point. However, the longer you wait, the profit returns get smaller and smaller. So instead of winning, let's say for example 200, if you waited that long to March 19, the returns are going to be less. It could be $10, $5. So obviously you want to sell before the expiration date. Okay, hope that makes sense. I want to show you one that I won money on. So let me see if I can show you, which is this one. And by the way, if you have Sundial growers, make sure you buy some stock. It's going very well, very well. It's over $3.44. As you can see earlier today, it was at 2:24 in the morning. It was 2:25 at 8:35 in the morning, and it just went up, man. So I made a lot of money on that. So if you scroll down, you can see some of the contracts I purchased. So for instance, let me see here, this one. All right. I'm trying to see the one I sold. All right. So for example, here's this one. Okay. So I bought this contract earlier today, 9 hours ago, for $300, and I bought 5 contracts at 60 cents. I predicted that this stock was going to hit 250 by February 19, right? Which obviously it did. We're already at $3.45. So when I saw that it hit my predicted amount of $2.50, I saw my gains going up. So as you can see, 5 hours ago, I was already at $525. Remember, I bought it for 300. Now I sold it at 525. So when I saw that I was making $225, and remind you, it was a lot higher. I was hitting almost $300 profit, but I got a bit scared because it was starting to go down, so I just sold. But I mean, at the end of the day, I sold and made $225. The difference within, I mean, it was just within a couple hours. So I mean, that's how you make some money. I mean, a couple $100 within an hour or so. I mean, you can't beat that. So now imagine if you have several contracts going for different companies or different stocks. I mean, you could make a lot of money, you know. But again, it's a lot riskier. You need more capital to get into these contracts. Now, you don't have to buy 5 contracts like I did. I mean, you could do 1 contract, but you know, the gains are not as high. So, but if I was you, test it out with 1 contract of 100 shares, and see if that works for you. You know, again, all you have to do is predict that the price is going to go higher. So if I was to buy this one now, I will go to trade options, and I will select that by February 26th, the price is going to go up. Well, actually, you know what? I think the market's close, so it's not showing. But you get the idea. I will post more videos like this in the next couple of days, but more. I recommend you guys do the trade options. There's more money involved, a lot riskier. I'm running into a few problems right now though. Robinhood only allows you to do day trades like what I did today. I think 4 per week or every 3 days or something like that. So if I keep running into problems like this, I will switch over to another platform where they offer unlimited daily trades. But for now, let's stick to Robinhood. I love the platform. It's very easy to use, and you know. So if you haven't already, make sure you hit the like and subscribe button if you'd like to know more videos. And I'll do another video on how to minimize your losses with options. So make sure you hit the subscribe button, and I'll see you next video.